All right, traders, welcome to today's market recap. This is Christian from Market Trade Group, and it is Monday, May 9th. Wow, look at these numbers for the day. I mean, that's pretty much kind of sums up the day. You can associate any type of adjective you want to today's price action, as long as it's a nasty adjective. SPY down over 3% for the day. Qs around down almost 4% for the day. I think at one point it did touch 4%. IWM also down 4%. Bonds actually caught a bid today, which is something that we just haven't seen. Even in the beginning of the day, the bonds were down again today. So finally they caught a kind of flight to safety type move today. Again, I think bonds very interesting to watch here. Silver down 3% for the day. VIX back up 15%. I'm hanging around the 35 level. Just very, very crazy price action to the downside. This is what the story has been. The trend has been down. We're in a bear market, and really the momentum in some of these areas of the market just reaching a very, very high level. You look at some of the numbers at this point year to date on the right, and then we'll go through some of the price action for the day. But at this point, SPY down 16% year to date. You've got the Qs down 25% year to date. You've got IWM down 21%. These numbers are just so startling to me at this point. The ARK Innovation ETF is down 56% year to date. I'll be brief here, but I think it's important for traders to learn about this type of a price action. Conviction is great to have, but if you are not adjusting to the price action and what is happening here in this market, this is what is going to happen, because the market does change, right? So you could try to stay and be high conviction all you want and think that you're right in the market, but that's just thinking. And if you don't adjust, and if you don't change to how the market has changed, right, this is what can happen, and the pain may not even be over for that type of situation. If you look at some of these names that are selling off again after the close, very high growth, making little revenues. This is not the place to be right now, right? I mentioned bear market. The trend is down. Also, the Fed is still going to be raising interest rates. So, at some point, usually what we see after like heavy downside price action is that the Fed comes to the rescue. The Fed's not doing that, right? They're going to raise interest rates. There was more Fed speakers today. They're going to raise interest rates. I think Bostic said something like, what's in the realm of rate hikes is 2 to 3 more hikes at 50 basis points for this year. But who knows? That could be more, it could be less, right? But that's kind of what they're thinking. They're certainly not doing the opposite right now. They are still very much going to be tightening pretty decently. So let's look at this price action. There was a couple developments. At this point, we have, so this is the weekly chart of the S&P. We are now breaking through the value area for the year, right? So we've talked about how the 80% rule was fulfilled, a move from one side of the value area to the other. However, it doesn't appear that price wants to stop here. So we just have to keep adjusting to what this price is telling us. Now, one thing is this week is not over. So it could be that we do close above there, but right now the price is below that level. Also note, how many weeks that we've been down at this point. 1, 2, 3, 4, 5, 6. This is a very steep sell-off. I mentioned in the room today that because I've been adding some shorts here and there, to kind of play things where I get a signal. But at this point, shorting, and I get it, it's worked so well the last couple of weeks. But I think, after this is the 6th week, right? And I would count this week because of the price action already is down, 3 or 4%, depending on what index you're looking at. But my personal take is I do think a bear market bounce is coming. I'm not really doing much until I see a signal, because it's just this market is too hard. Like I just, what I'm doing during the day is just kind of observing things, right? I want to talk about the Nasdaq for a second here, because this did make it down to the bottom of value. It still says on my Thinkorswim that well, it says downtrending, but the 80% rule is complete. If you want to look at the Qs as well, right, that 80% rule is complete, right? So I think that was in order, and now we have to see if this kind of changes direction at this point. And same thing here. I mean, this has been an enormous move over the last 6 weeks. 1, 2, 3, 4, 5, 6 red bars in a row. This would be a logical place that we find support. But the market doesn't always have to be logical, right? Or what's the saying that we always hear? The market can stay irrational for longer than you can stay solvent. I would think about that phrase right now, because even though I think that we're, and I'm kind of just waiting for that, and I'm not really pressing and adding shorts here, because I just don't think that the risk reward is the best. But things are still moving down without any sense of saying, hey, big buyers are coming in. Again, when I say buyers, it's the institutions. But here's what I'm talking about in terms, what I'm watching during the day, and I'll use Nasdaq futures. But this is something I've been talking about for a while. Is just, there's big sellers in this market. I don't know who it is, but you could see every time that we're going to turn the corner, right? And this has been going on now for the 5-6 weeks, is that anytime that we're going to turn the corner, right, a lot of these 5-minute bars, they start green and somebody is selling like crazy to not allow the price action to turn the corner. Because what happens sometimes, I think, when price actually turns the corner, gets above the 20-day moving average, that's a trading signal, and other traders follow through. Well, whoever's doing this is really making sure, that these bars do not change the trend for the day, right? And then it's just met with, at that point, at these pivot points, which is like the 20-day moving average, or up here you see another one, right? They are just crushing this market to the downside. All right, so we'll just kind of have to wait for this to flip to when it entices some buyers. Like I said, what I thought was interesting, and again, if you look at the 1-hour chart, this is just steady down, right? It's basically in a line, right? Very little, we got above this 200 period moving in. So this is also something that I like to watch on the 1-hour chart, right? Price got a little bit above the 200 period moving average, failed a couple of weeks ago. And then of course this was Fed day, but the trajectory has just been straight down. All right. I mentioned bonds because they are important right now. So this did rally, but rallied into resistance, right? This is the 30-year bond. Right, I had a question on Twitter. If you don't know this and you're trading, then you need to go to the textbooks, right? Somebody said, well, I don't understand, how are bond prices going? If bond prices are going down, interest rates are going higher. I don't understand that. That's how a bond works. So again, I don't mean to laugh at anybody, but you should not, you should have the understanding of how, basically a bond works. Because right now, interest rates going higher is a big deal right now. That is really one of the mechanics of why that we're seeing what we're seeing in terms of equities. The bond market is much bigger than the equity market, and it really has a lot of implications, right? Better believe that a lot of institutions are watching what bond yields do, and have been all year long. So here, when we look at the US yield, where are we right now? The 10 years yielding 3, the 20 years yielding 3.8, the 30 years yielding 3.1. Remember, when the Fed raises interest rates, they're not touching any of these. It's the overnight rate. A lot of people get that confused, right? It is the it's the shortest term rate. It's the overnight borrowing rate. That is what they're changing. They're not doing any of this. This is all set by market forces, supply and demand. Okay, but so yes, we'll watch. So this was not, this was a good thing to see finally, a bid going, back into treasuries, kind of a flight to safety. I think that needs to transpire. And that's what we saw today. So we'll see, if you want to look at TLT, which is a different maturity too, the level to watch there is 115.20. Again, a lot of implications. I can't say that enough. How many times do I keep repeating myself? But I want to make sure. So here's where, if you look at some of these sectors, just pretty amazing. And, I've been in some energy names because they've been in the best place to be, but you kind of just knew, one of the things that I talked about in the weekend member video is that there's been this separation between commodities, right? I don't know if, people have talked about this year, oh, how great commodities are and so on and so forth. But you've started to see different commodities break down, right? So it's not rah, 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 all the commodities are going up. If you look at what iron ore has been doing, if you look at what aluminum's been doing, if you look at what palladium is doing, right? A lot of these things are breaking down a bit, not up. Here's the palladium chart, right? Copper's another one too, right? Look at what copper's been doing, right? So again, the commodity trade looks like it's got some, decent, cracks in it. Again, depending on what commodity you're looking at, right? Nat gas was the star performer last week, but look at what Nat gas has done the last 2 days, right? And they call this one the widowmaker for a reason, right? Just about 9 and all the way down to 7.1. That's almost a 20% move, right? In just 2 days. So this just moves so fast. But yeah, the move in the energy space, right? It just shows you that you cannot relax your risk metrics at all, even and just because something is trending higher, right? This market, and I believe the famous William O'Neill says that you have to be careful of breakouts in bear markets, and that's kind of the story. Metals and mining, right? That was a very good profitable trade for us earlier in the year. But look at the metals and mining group, right? Since that broke the 50-day moving average. So a lot of these, right? So make sure you're paying attention, right? To what, not just overall commodities are doing, but which one, look at the ones that are breaking down versus breaking higher. I don't think you're going to find any after today that are breaking higher. But you certainly can see that some of these things have really been moving to the downside very quickly, right? And so to continue onward here with some of the performance, it just this was a head scratcher to me. The home builders, they've actually been acting fairly well, but that doesn't mean that they're not going to eventually take that next leg lower. Right. I've been watching things like and just basically watching, not trading. Home Depot is something that I actually traded on Fed Day, and took it off, very quickly the next day. But you could see, so even though this is nice to see Home Depot rally today, it's rallying right into resistance, right? And that could be a short setup if it doesn't manage to get above 296.60. All right. So for the most part, I can go on and on about, different lessons and so forth. Here's what I did today. I feel like I did not capitalize this enough. This was MSTR, really got this one right. However, I didn't think it was going to move down 25% for the day. Just unbelievable, the price action. That's something too that we could talk about in this video that we haven't talked about too much, is that now Bitcoin is breaking down. I know Bitcoin means different things to different people. To me, it is just another area of speculation. And again, if you think I'm wrong with that, that's fine. But you could see that this is now breaking down. We talked about that last week, sent out multiple charts on this, how it broke the May value area to the downside. I actually put on puts here, right? I had weekly puts on in BITO for the Fed meeting. And it gave you kind of a tough day here. I stayed with the position and took it off here, and you could see I did not roll it, unfortunately. I would have loved to in hindsight, but I did not roll the position. And you could see what's going on here. So again, that's BTO is what I'm referring to, because you could buy options on this on the Bitcoin futures ETF, right? There's still not an ETF on spot Bitcoin, right? But this MSTR looked like a really good setup to me, and it just looks like it's being liquidated. Look at the volume today. All right, so that was a really nice trade from last week. I did roll that trade. This one, I guess I could have added a bit more because I did not put on a big trade. A couple of trades from last week just out of very quickly here in the first half hour. Bristol Myers, right? This is one of the weekend video names. I did put this on. I took a quick target where it hit resistance in the short term, which is the top of value. So we'll see. It's back inside value, right? A lot of consumer staple type names are doing very well. You know, this is not bullish in my opinion, right? When you see soup, right? Campbell's soup going up like this. What's the other one? Schmucker's jelly, right? Jelly's another one that's moving up. I actually went into HRL, right? Which is spam in my opinion, spam market. Right, so I'm looking for this thing to maybe just go up to 53.85. But again, these consumer staple names, it's just it's another flight to safety when you're going into soup and jelly. All right, so where are we? You know, I think everybody wants to know, or most people want to know where we are in this process. Right, I talked about how this breadth has been, you know, one of these things where when you look at up volume versus down volume, right? That is, we've got some heavy selling going on, right? That usually has to happen at some point in a correction where you've got that heavy selling going on, right? But it's not a one-day event, unfortunately. It's not, hey, you see this heavy selling pressure like you did today, right? And you could kind of see what I'm referring to, right? This today was actually worse than what we saw at the end of last week. So you got to let this kind of work its way through. You know, clearly this event in here saw some heightened selling for a while, and then it kind of straightened itself out. Oops, let me get to the right chart. No, I don't want to be on the spam chart, but this particular event was one day, and then we kind of marched higher after that, right? And I think it wasn't actually, right? It actually took a couple weeks, right? So here was your big one day downside move, heavy downside move in volume and breadth. And then it kind of took a little while for, you know, the market did go lower. Buyers kind of came in there, and then it took a couple weeks, right? If you go back to what we experienced in March of 2020, right, which is in here, here's where the heavy breath occurred, and we still went a bit lower. That breath was still heavy, you know, selling, and I'll blow this so you could see this was the heightened number, but it still stayed. This was a negative 26, right, to follow through. And then what happened was it got less and less, right? So as the price action continued to go down, it looks like the sellers just got exhausted, right? So that's what we want to see. So we got to a negative 16 today. Now, does it need to get to a negative 25? No, it doesn't. But what we want to see is for the breadth to start to come in where the selling gets exhausted. So we're definitely not there yet. Another thing too, sorry to be negative, right? But if you look at the ETF fund flows, right? So I tend to use this as a contrarian, right? So for example, the heavy speculative money goes into the leveraged ETFs. What's usually, you know, what do you notice about the speculators, right? The speculators really usually have bad timing and are wrong, right? So what are they doing here? Right? Notice what's on the top of the leaderboard for the 1 week flow is TQQQ, right? Which is triple leverage Qs, right? Somebody's still buying the dip in this stuff, right? That's concerning, we don't want to see that, in my opinion, right? You actually want to see them going heavy into SQQQ, right, which is 3 times short. That was actually a good signal, and I put those charts on Twitter, and I talked about them in the weekend video as well. I think I just responded to somebody on Twitter. I don't think I actually put it out on Twitter, but one of the things that was a nice contrarian signal back in March through that month of 2020 was people really started to press, and add more shorts via things like SQQ, via SDS, right? Sam, David, Sam, right? We're not at that point yet. I don't see those funds going up big in assets, right? So we actually want to see those flows, but so the fact that they're still buying the dip tells me that people are not exhausted yet. And from a sentiment standpoint, you want to see it washed out. You want to see people stop buying the dip because either A, they don't have the money to buy the dip anymore, or B, they're kind of mentally exhausted from buying the dip. So that needs to, I think that's something else that we're going to need to see. I don't know if we see that in the next couple of days, next couple of weeks, but for now, I try my best to sit on the sidelines. But I'll tell you, like, it's, even though I don't have, I've got less than 10% of my portfolio in positions, the move in energy stocks, Exxon was down huge today too. I'm holding some Exxon. LYB is another name that I went into last week because it's a cheapy play, but there's not a play, there's not, other than soup right now, there's just not a lot of places to hide out in, and cash is king. All right, and until this volatility starts to wane a little bit, again, right now the volatility is, the level's 35, right? It's a very high level. We have not taken out the highs, but still, I mean, it just tells you how fast this market is moving right now when you've been hanging around the the 30s, right? So that's it for the Monday video. Again, just taking things one day at a time and trying to have a couple shorts on here and there, and not get exposed, stay fresh, preserving your confidence, preserving your mindset right now is of the utmost importance, right? And not getting caught up in some of these things that may look attractive, but Upstart is a good example of this, right? This stock was at 400. Just because it's down to 77 or 90, it's not cheap. It's not cheap, guys, and it's not in an uptrend, right? And look at this thing go down to 47. Who knows? Maybe this is goes under $10 at one point. You just don't know. What you do know is this is trending down, right? And has been for a while now. Right. All right, guys, that's it for today's video. Have a great night, and I'll see you tomorrow.